You're going to love this episode because it's investing in assets that don't require a lot of maintenance, and that's parking lots and mobile homes. I always wanted to own a parking lot when I was a kid. I wasn't even interested in investments, but I could just see, man, this thing is collecting money and it doesn't even require any work.
Exactly. And how this guy got started and how he accidentally found wholesaling is what blew my mind.
So I've been at this now. I'm going to age myself. I'm 46 as we record this, and I bought my first property at the age of 20. I always joke and say it's real estate's really the only real job I've ever had. Aside from bartending, which isn't all that real a job, it was a fun job. Made good money, met some pretty cool people along the way, but real estate was really it. And I've been at it since the age of 20 and started with a lot of, like a lot of folks do, started with single family stuff back then. And I had a mentor that got me into the business. And I followed his lead. I didn't reinvent the wheel, and he was more of a buy and hold guy. He would, in the small town I grew up in, Pennsylvania, he owned a portfolio of rental properties, single family and small multifamily properties. And so I just really followed his lead. I ultimately went to work for him for like a year for free, just to be around him. I was going to community college at the time, tending bar, and I wanted to get into this business. And ultimately I in between my my tending bar in the evenings and some classes during the day, I would go do whatever David needed out in the field to help him out with his business. And over a year period of time, I learned quite a bit. And that was at the age of 19. Ultimately, worked for him for a year, bought the first property at the age of 20. And it was the intent originally was to follow his business model and essentially renovate the home and hold it as a rental. And what I learned is that, number one, I used all the cash I'd saved up to put into the property. I did have a private lender to help fund the deal, but I used like the $7,000 I had saved, and it was gone. And the cash flow was minimal. I mean, it was a few $100 a month. And I realized very quickly that David had been at this thing for like 25 years. He had capital. He had a portfolio underneath him. He had a track record. He had banking relationships. He had a lot more than what I had, and I was broke with one rental property. And so I realized that my model had to morph a little bit. So I more turned it to wholesale a couple properties, keep one, wholesale a couple properties, keep one. And I did that for a number of years in my early to mid 20s. And then, just as things sometimes evolve, I got introduced to commercial real estate. First property was a retail property, and then I kind of dabbled. I bought an industrial property, bought an office building, bought some self-storage properties, and then fast forward to today, I'm kind of trying to condense 2+ decades and distill it down in a short period here. But 2011 is really where I got introduced to what we do today. So it's been quite some time. But back in 2011, was introduced to mobile home parks, bought that first property back then. Have since now owned about 5,000 mobile home lots, about $500 million of mobile home properties throughout the last decade plus. And in addition to the mobile home parks that we own and operate today, we also buy parking assets. So, parking garages, parking lots, and in a number of cities across the country. So, there's a lot there. I've done a little bit of everything. I'd say the one area that I haven't really spent a bunch of time in is development. I haven't done any development deals really. Most of what we've done is existing type properties. Some of the mobile home parks we own today, we've done expansion where we've had some adjacent land where we've expanded and developed additional lots. But the only thing I haven't done is ground up development.
Wow. I've always wanted to own a parking lot when I was a kid, before I was even interested in real estate at all, before I had read Rich Dad Poor Dad or really understood anything. Somehow, when I was a kid, I was like, these people are charging for this asphalt downtown, and there's absolutely nothing they have to do but collect money. And that's how I was thinking about it. So never have pursued that way, but definitely I'm going to have questions there. And Ryan, I think, did his first mobile home park acquisition, right? This past year.
Awesome. It's been 2 years. Yeah, mobile homes are a different animal altogether. The one that I bought, of course, has the worst tenants ever. It is a third world country, but it actually does cash flow, and we are trying to clean it up. I had some questions, though, that I wanted to ask. And this is probably hard to go back 26 years, not to date you, but you dated yourself, so... but when you're 20 years old, I know you had a partner. How did you hear about wholesaling? Like, there wasn't YouTube that was showing videos. There wasn't.
This guy, right? Well, that guy, I guess he was. Yeah, you're right. Because that guy he was, kind of working with for free was was doing buy and hold, right?
And he was in wholesaling. Yeah, it wasn't really a defined term back then. That's a good question. And so what ultimately occurred is I realized that first rental property was not going to make me rich, and it's going to take quite a number of years for me to save up enough to go buy the next one, right? And so I knew something had to change. But what I found is that, so David, who was my mentor at that point, he's about 25 years older than I, right? So he was kind of like he's like a, older
Veteran.
dude. Technology wasn't a thing for him. Yeah, but he wasn't into technology. He struggled with like email and, PowerPoint presentations and all these things that's kind of where I helped him with his business. And what I found is that like, he was just old school. And a lot of the deals he found, he never really marketed for him. Like he'd have a couple of realtors that would kind of like, send him deals here and there just over, decades plus. He built this portfolio, right? But he never really got good about going out and bird dogging and actually, do some, doing guerrilla marketing tactics like bandit signs. And back then it was newspaper ads and, bus stop signs and all that kind of stuff. And so I got really good at finding deals. Like I ended up having, I literally went to a Ron LeGrand conference, which he's still around teaching this stuff. But basically I learned a couple tactics from other guys that were doing wholesaling at the time. And one of the big ones that worked really well back then were these bandit signs. I'd go, I went and bought literally a box of 100 of them. And I'd go put them around town. And literally that first batch I put out, I had more leads than I could manage, and actually tied up 2 of the properties. And I literally didn't have the capital to do it. And David's like, holy shit, like, how'd you do that? Number one, like it, normally I buy 1 or 2 a year. Yeah. And so basically he bought them he's like, well, hey, you've tied them up. How about I just give you like 5K? I think he gave me like 5K for one and like 6K for the other. And I'm like, oh, there's something here. I was like, and he had like a network of other local investors that like he had coffee with, weekly. And so he knew some of the other landlords in the area. And so basically I kind of stumbled upon wholesaling, and I was like, this is it. This is how I would love to keep these 2, but I'm going to wholesale these. I'll take my 11 grand and I'll go take that and I'll go find another one and I'll hold it. Right. And so it kind of just evolved organically into me having to wholesale enough to where I had some capital. And then I would try to keep like the best, right? Try to cherry pick what I felt were like good long-term hold rentals. And I didn't know enough back then. There was probably some I wholesaled, which I absolutely should have kept, and others that I kept that I should have probably wholesaled. Right. But that's really how the business started to evolve in the first couple of years.
Did you have active cash flow somewhere else? Did you have a 9-to-5?
I was tending bar.
Yeah,
I was tending bar. Yeah, tending bar. So like, which is kind of perfect, because I actually made, at that age, I made quite a bit of money. And I only worked literally Thursday, Friday, and Saturday nights, and I wouldn't go into work till 6 o'clock in the evening. And so it had no. It didn't conflict with me taking classes, and I only took 12 credits. It wasn't a big schedule, so like I had a lot of free time during Monday through Friday working hours. I literally spent all that extra time with David in his home office, returning phone calls, listening to him, going on meetings with him, dropping off leases, picking up supplies for his vendors if he had a contractor working on a house, whatever he needed. I basically was there to help him do it so that I could just be around it, be surrounded by it. And I learned a ton in that. It was about 14 months where I essentially kind of gave him all my extra time so that I could in turn learn what it was that he did.
Yep.
So talk to us about your friendship with David, because a lot of times, people will just come up and say, well, what can I do for you? But I don't really have a job set out or know that they'll do it well. So that doesn't turn into a free labor type environment typically, mainly because it's work for me to figure out what that might be that they could do. So how did you navigate that? There must have been some other connection, right? From
I'll give some more
context.
No, that's great. I'll give some more context because there's more context to the story. That's a great question. So how I met David is I literally started dating a girl. I was 19 at the time, and her mother had recently gone through a divorce, and literally her mom started dating this guy, David. And that's how I met him. I met him by visiting my girlfriend at her house, and just, he was a nice guy, very outgoing personality. And just, over a period of maybe a couple of months of just seeing him around, we grew a friendship, I guess you could say, right? Like we had just fun conversation and not a lot in common per se, because he was basically my parents' age, right? But like still, like just a really kind guy, and had seemed to have a lot of stories, and was a really good storyteller. And so essentially what occurred is, like, randomly one day he said, hey, I got this he had like a not really a business partner. He had like a guy that was a passive partner that had more like a money partner. He's like, hey, I bought these tickets to go to this conference in Philadelphia. For it's like 3 days. I put like $5,000 on them, and I was going to go with his name was Tom. Tom can't go. He's like, I know you've asked questions about what I do and this, that, and the other, and you don't know too much about it, but you want to go this thing? It's already paid for. It's 3 days. You'll meet other guys like me, that they're doing deals, and you'll probably have even bigger portfolios than I, and like maybe you'll learn something, right? Because at that point in my life, I didn't know what I wanted to do when I grew up. I really didn't. Like I knew I wanted to do something. I was always entrepreneurial, literally worked from like a young age, shoveling snow, mowing grass, had a paper out the age of 12. Like I was always hustling, making money. And so I took him up on that offer. And when I went to this conference, I met a lot of people like him, even much larger scale. And what I found is that I didn't feel like anyone were really smarter than I. They just knew something I didn't. And so when I came back from that event, I knew that the excitement and the enthusiasm I had would probably just go by the wayside if I didn't do something with it. And so I had been around David enough to where I identified areas where I saw him struggle. Number one, like, his world originally began with like, landlines, right? And so this guy's got a cell phone, and like he struggled even like checking his voicemails, and like, he would just not return calls because he didn't know he had voicemails, or, responding to emails. And he was kind of he managed his rental portfolio. So like I was watching like this leads kind of fall through the cracks. Like he'd have a rental property. I'm like, why isn't that leased yet? He's like, I don't know. I'm posting ads and this, that, and the other, but just haven't found the right person. I'm like, you've got like 9 voicemails on your phone. Have you talked to those people? And so anyway, I went to him. I said, hey, let me make you an offer you can't refuse. I'll come work for you for free. I think I can at least help you in a couple of these areas. You'll buy some time back and create some efficiencies in your life. And he accepted. And so that was it. Really, it came down to just being almost like an assistant for him, and helping him navigate through technology to a certain degree, and making his life a little easier. Because technology, to us, it creates efficiencies in our lives. To him, it created additional stress points, which he didn't like, because he was just old school. He was like a paper pen type guy. And now I've got to use a computer, and I get this flip phone in my pocket. I got to deal with this crap, And so that's it. That, like my value proposition was like, hey, let me help you buy some time back. And it just, make your days more enjoyable, because he didn't want employees. He didn't want that. He wanted just to be by himself. But I saw how I could help him.
Yeah.
Nice.
Well, so that's a huge difference between the way most people want to work for somebody in order to learn. They'll say, what can I do for you? But the way you did it was you had a natural relationship built with him through an interest. And then through your own observations, you gave him a specific way that you could help. And that was the difference between somebody who just says, hey, let me what can I do for you? Versus, hey, I can help you in this specific way. This is an offer you can't refuse. That's fantastic.
That's right. I mentioned to you guys a little earlier as well, not to go down a rabbit hole here, but I mentioned, my business partner in Sunrise today, we've got about 400 million of assets under management, and my business partner, it's the other principal of the organization, Brian Spear. I literally met him through my podcast, and I'm sure you guys get folks that reach out all the time. Like, I want to do what you guys are doing. Can you teach me? Can you coach me? Can you help me? Like, what can I do for you? Like, it's just like, you get a lot of that stuff. You want to help. I do want to help everybody. I'd love to help everybody, but there's only so much time in the day. And that's how I actually got linked up with Brian. He was persistent, and he ultimately saw some areas of my business. He had built other businesses. He saw some areas where he's like, I love what you're doing. It's great, man. Like, there's some rocket fuel that you could put behind this. I think I could bring that rocket fuel. Let me come work for free, and let me show you a couple of key areas where I can improve upon your business. And I denied it for like a year. And he finally is like, look, man, I got some capital too. You got any deals that you need some money for? I'll put money into it, and I'll go work the deal to show you that, like, I'll do anything to make this happen. And he did. He literally came in with like, some capital and some knowledge, and just basically an incredible work ethic. And ultimately now is literally an equal partner in our organization. So.
Right. Yeah. I do want to reiterate, you do want to help everybody, but if you spend all the time helping everyone who asks, you wouldn't have any time to do the core things that are necessary for keeping the business going. So thanks for explaining that, and very cool story, how you found somebody who was your business partner through his own persistence. And that was great. So going to what you have done in mobile home parks, obviously the first home you bought didn't really cash flow too much. So that was a big realization for you. So what was the first mobile home park that you did?
So back in 2012, I got introduced to mobile home parks in 2011. 2012 is when I bought the first one. It was up in Atlanta. It was REO, had been vacant for about a year. This was after the crash, lots of distress in the marketplace, and so In fact, I lost everything in 2008. Was kind of in a rebuild phase, starting over again. And this mobile home park literally was the first investment I made in what I call is like my version 2 or phase 2 of my real estate journey. Yeah, and so it was a 34 space mobile home park up in Atlanta, Georgia. Literally owned it up until about, I guess it's been about 3 years now that we sold it. So owned it for quite some time. But bought a fully vacant property with had 34 homes in it. It's not typically what we buy today, but I got that at what I felt was a good price and a can't lose price. And even if everything went sideways, I'd still be able to get my money back out of it. But bought that first one for, I think it was 210 or 220K. Put about the same amount back into it as far as renovation of the units. And over a period of about just shy of a year, got it stabilized, got it leased up, hired an on-site property manager, did a cash out refinance, I think at like month 14 or 15, got all my money back out of it and went and did it again. And so that was really
Right.
that was a stepping stone for, again, version 2 of my real estate journey.
So REO was owned by the bank, and that was a
That's
big
right.
way to get deals in the past. It's not anymore quite so big of a way to get deals, right?
No, I mean, this is 2012, so like there's a lot of distress back then, and that doesn't really exist today, at least not in mobile home parks. You don't really see too many REOs. In fact, I can't remember the last time I actually saw an REO in the mobile home park space.
How do you find deals now on the mobile home park?
Yeah, great question. A litany of ways. I'd say probably about 80% of the portfolio we own today was direct to owner type marketing. Again, just kind of carrying over what I learned back in the day with single family stuff. Building out a database. This started back in 2012 when we bought the first property, the first mobile home park. I realized that you couldn't back then, at least back then, you couldn't go out and just buy a list of all the mobile home parks throughout the U.S. That list was available for shopping centers, for office buildings, for industrial properties, for single family homes. That list did not exist for mobile home parks. And so I hired a team of VAs and essentially went about it manually, like Google Earth, identifying, in certain geographic areas, because you can tell on Google Earth what are the mobile home parks, right? They're pretty easy, they stand out. And then literally diving into, Secretary of State records and uncovering who the owners were in the LLCs and skip tracing their information. So 80% of what we own today has been all direct owner marketing, building relationships over years and just being there when the time comes for them to sell. A lot of times it wasn't like a motivated seller. It was just a time in their life, like a season, like either they've owned it for 30 years, 40 years, and they're getting old, or maybe they're just, the time is today. Hey, I want to go retire and move on and just go spend my time, traveling the world, whatever the reasons were. We wanted to be there. And so that was the majority of our portfolio, but the other portion of it's mostly broker relationships. That's a big thing in our business. There's brokers out there pounding the pavement all day long, just like we do, calling owners directly. And brokers only get paid when they transact. So, we're known, we've got a reputation in the business that, you bring us a deal that fits our buy box, we're going to close it. You're going to get paid. You're not going to be retrading. You're not going to be messing around. We're not going to be dragging it out. We're going to get the deal done so that you can take your commission check and go spend on whatever you'd like. So that's about 20 to 25% of what we do today.
So if it's through broker referrals, does that mean you are working in a specific area all the time?
No, we've got a footprint right now in the Northeast, Southeast, and the Midwest. So I think we're in like 14 different states. And so there's a number of specialty brokers in our niche that only specialize in manufactured housing or mobile home parks. And so, I don't have any other, there's a lot now. I mean, there's more than 50 of them. Some of them are even big groups like Marks and Milchap, CBRE, Colliers, things like that. So there's a number that we work with, some more than others, but our footprint's pretty large.
So when you are buying the mobile home park, is it just the park or are you buying any of the mobile homes?
Yeah. In a perfect world, it'd just be the park. And a majority of what we own is just that, where we don't own the homes themselves. There's a number of mobile home parks where we own 0 homes. It's, the residents own their home. They just pay lot rent. But there are other communities that we own where we might own, 5% or 10% or 20% of the inventory. And a lot of that derives from how the prior ownership ran it. We might just be acquiring, homes that are owned by the community because that's what they did, right? Like they might have maybe brought some new homes in, maybe over the years. If someone maybe passed away or someone was moving, they would just go buy the mobile home. They wouldn't resell it. They would turn it into a rental. And so I think today, we've got about 400 homes, throughout our portfolio. and that makes up I think about 20% of our overall holdings at the current time. So, but in a perfect world, we wouldn't own any. Really, like the business model is much more profitable not owning those homes, because what you find is that the residents that own their own units they're stickier. I mean, we've got residents that have lived in some of our communities for 40 plus years. It's no different than them living in a normal stick-built subdivision, right? Like, and if they own their home, if the roof leaks, if the plumbing leaks, if the AC breaks, they don't call me, they call a vendor to come take care of it. Whereas with the rental, you've got a lot more turnover and you've got maintenance and repair, right? And so if we can get away from that, it creates a much simpler business model.
That makes sense. And it's kind of similar to the way you guys own parking lots too, right? That's another asset that doesn't require quite so much maintenance.
That's right. Yep. We own both parking lots and parking garages. Parking lots, to your point, literally require nothing. I mean, aside from some asphalt patching here and there and maybe restriping them every 5 years, but outside of that, there's not much that can go wrong with a surface parking lot. Parking garages are a little bit different, and a lot of it really depends on what part of the country they're in. Concrete, does deteriorate over years. It's typically got steel rebar inside of it. And so cold environments, if you start getting far up north where there's a lot of snow and then they have salt in the roads, and that salt, makes its way on the car tires, goes up the concrete, and there's cracks in the concrete. You get where I'm going. Like, there's deterioration that can happen. There's capital expenditures that you need to budget for to maintain those types of things. So, for the most part, we own stuff in the Sun Belt. And so where there's not a lot of snow, not a lot of ice, not a lot of salt in the roads, and very, very little deterioration.
Well, and a parking garage is just way more expensive, right, than an actual parking lot. So
yeah. I mean, like we've got some surface lots we've maybe paid $4 or $5 million for, whereas the last parking garage that we bought was $34 million. So quite a difference in price.
Is there like a 1% rule for parking structures or something that you would follow as a rule of thumb, or what? How do you determine if it's a good business?
Yeah, it's a good question. It's a little bit too complex to use the 1% rule. For us, like we back into, we know what type of return our investors are seeking. And so really it comes deal by deal. What every particular deal we do has got its own business plan, right? Like there's a different levers we can pull with each deal in order to extract the value. And so for us, we're just trying to back into it from a conservative perspective, knowing that we can actually achieve the returns that our investors are seeking. And so there's a lot to that. Like there's a debt function, like, what type of debt can I put on it based on what's happening today in that garage? Is there levers I can pull to add value? Or the rates, can I increase rates? Can I, increase the number of monthly parkers? Can I put some new even equipment in there? Like technology is a big deal.
Right.
A lot of times, like we'll literally just go in a garage. In fact, we just bought a garage in Charlotte. I guess it's going on a year now. And, technology has, it's changed so dramatically just over the past decade. The parking equipment that was in here was only like 8 years old, which is not old in the grand scheme of things, but it kind of is when it comes to technology. And so we put new technology in there that allowed us to have a much better handle on dynamic pricing. This garage is across from the Spectrum Center where the Charlotte Hornets play, where big events happen. And their model didn't allow them to just adjust on the fly. Like they could adjust 24 hours ahead of time for events that were coming, but they couldn't adjust on the fly. So now we can literally monitor it minute by minute, hour by hour, and adjust pricing. Like we see like, hey, event's happening and like the event's about to start, but we're not 100% full. Guess what? We're going to drop the pricing like $3, and literally drive that last 20% in there to fill it up. Whereas maybe they would have parked somewhere else, right? If, given the price. And so we lower it on the fly to fill that up all the way. And so just that alone has allowed us to drive about 8% additional revenue in that garage, which is,
oh, wow. That's
fantastic. We're talking like hundreds of thousands of dollars of additional top line revenue just by making about $150,000 investment one time in the technology.
So, what are the big things that you can pull besides technology to improve the parking lot? That seems like a big one. And if you're doing cash with attendants, of course, sometimes the attendant can say one for you, one for me, right? So glad you're using technology. That's not even in the picture.
Yeah. Just, the basic stuff, like think about like, just lighting. People want to park somewhere safe. I mean, you'd be shocked to think about how just, we bought this last garage from a big institutional group. They'd owned it for 15 years and, they got all the money in the world, but they got a million other properties, right? And like these things just fall by the wayside. Like, like you've got like multiple layers within an organization, and like the guy that's down here that's responsible for this garage he's got 10 other things he's monitoring as well. Doesn't have his eye on the prize. And so like the lighting there was, like, I don't know, 15 lights that were out in a number of the lower floors, which lower floors get occupied first, and people are driving in there and driving back out because they didn't feel safe, especially women. So that was a big deal. Even just the condition of the garage, you know what I mean? Repainting lines, making sure that, so we have porters that literally are there all day long that go around, pick up trash. I mean, literally wrappers out of cars. I mean, just people are slobs by nature. And so like there's trash flying around everywhere, right? You also want to keep like homeless away. If the area's got a homeless problem, you want to make sure you've got a presence there that actually keep them out. If there's a homeless guy sleeping in a spot, I promise you that someone's probably not going to park on that level because they don't know what that guy's going to do, right? He might be high on drugs. You never know. So little things like that are so simple in nature drive a huge amount of value. And then pricing is a big one as well. Just like these guys take their eye off the prize, they haven't monitored rates. So we do rate research like 3 times a year. We want to know what all the other competitors are doing. And, in a garage of that size, like the garage I'm referencing in Charlotte, it's just shy of 900 spaces. And they were about $1.75 on the hourly parking, which is about 60% of the parkers that park there. They're like $1.75 below market on rates. And it is the most convenient garage for what it's typically used for. And so we knew we could raise rates easily $1 and not lose anybody. We actually raised them $1.50, and we didn't lose. There was no attrition. No, I mean, they're going to pay that amount parking somewhere else. Our garage is more convenient. There's inelastic demand there. They're going to park there no matter what. So just keeping up with the rates in the marketplace. I mean, there's a couple simple things that literally cost very little money, to change or, to readapt, that ultimately drive a ton of top line revenue.
Man, that does make a ton of sense. And I'm kind of looking in DealMachine now because I've never looked at parking structures. And I kind of would love to show you, if you don't mind, just to see how would I target the right parking garage? Is it based on how long they've owned it, or is it based on the size of their
Not
portfolio?
necessarily. Yeah,
Here's like 1,000 here in St. Louis. I picked parking structure, and like here's one, and the owner here is like 75. So maybe he would want to sell it instead of passing it on to his family.
Yeah, potentially. I mean, and I wouldn't say that the like the stuff we buy, there's different motivation. I think it's probably a little different than maybe like single family stuff where you get, folks lose their job. They're like, I can't pay my mortgage, right? And you get this motivated seller. Whereas you got a guy at 75 owns a parking lot. He's probably putting cash in his pocket every month, right? Like he probably doesn't have like a financial strain from owning that parking lot. But you might find motivation because ultimately he, in his mind, it's worth maybe what it was worth 20 years ago. And if you go to him with a number that you think's a great, it's a fair deal, and he might think it's an amazing deal. Like he might really consider selling when you start waving cash in his face, right? Money today is much more valuable than money, 10 years from now. And if you could, prove that point to him, he might be a seller. So, you never know. I mean, the last surface lot we bought it from a guy. It was a local owner. He had owned it for, like literally 40 years. And he wasn't motivated to sell it. He literally owned, zero money on it. It did like $1 million of revenue a year. The guy didn't have, he didn't keep up with even the price. The pricing was low because, charging another $3 an hour wasn't going to change his lifestyle. But the reason why he decided to sell is because he was getting old, and he was making estate plans so that his heirs, right, his kids and his grandchildren, had a trust, financial trust set up for them. And so like his selling wasn't motivation. It was just more estate planning purposes. Right. And again, he hadn't maximized the value. He hadn't adjusted prices in a very long time. He didn't really need to sell it for the most, the highest dollar amount. I mean, and actually for all he knows, like he didn't, in his eyes, he got the highest dollar amount for it. Right. We walked in, basically raised rates by, a couple bucks an hour, increased the top line revenue, increased the value, literally overnight. And we were both happy. He was happy. He got what he wanted. We got what we wanted, but we knew how to drive the value and extract the additional value out of it.
Nice. So when did you start Sunrise Capital Partners? I am assuming that is a driving force for, the money you're able to put down on the properties that you're talking about.
Yeah, we started Sunrise in, formally 2014. Prior to that, most of the deals that we did were, personal money, friends, family, some, very specific investors that would fund our deals. Sunrise Capital, basically, when we founded it, we wanted to build a more scalable model, a larger foundation, a larger organization that could live and breathe even when we weren't around, maybe 10, 15, 20 years down the road. And so when we founded Sunrise, we had the intent to go out and actually start creating more formal fund structures and actually doing deals in a fund where we would go out and raise high net worth, capital from retail investors to come in our fund. And basically those that wanted passive income, wanted mailbox money, and essentially come along for the ride, but not necessarily have to do the day-to-day grind and the hard work associated with finding the deals and operating the deals. And so that's when Sunrise was born, 11 years ago. We launched our very first fund. We're literally about to roll out our fifth fund now. And it's been an evolution over time. Up until about 5 years ago, mobile home parks was all that we did. We just started buying the parking stuff. 2020 was the first year that we bought some parking assets, but that's all we do. Like, those are our two lanes. We don't really stray from it. We just stick with what we're really good at, mobile home parks and parking. And they're very complementary to one another. They're both kind of parking, right? And when you think about it, mobile home parks, you've got someone's home that's parked on a lot and they're renting it from you. So different business model, but a lot of similarities as well.
So is Sunrise an organization where I could give you $100,000 and you put that to work for me?
Yeah, if you're an accredited investor. So you do have to be an accredited investor. We do Reg D 506Cs. And so you have to meet the accreditation status. But if you do, yes, that is correct. Our minimum investment is $100K. And you can come along for the ride. And we just wrapped up Fund 4. We're rolling out Fund 5 literally in a couple of weeks. We got a couple seed deals that we have in contract now that will be going into Fund 5. And yeah, so absolutely.
Awesome. Is it an equity position, or is there a type of loan with a, some type of, how does that work?
Well, it's an equity position, but there's a preferred return tied to it, and the preferred that you receive is based on your initial capital investment. So there's 3 different tiers. The lowest preferred return is at 8%, and that's anyone that invests up to $249,000. And then from like $250,000 to $500,000, it's a 9 pref, and anything above $500,000, you get a 10 pref. So,
got it.
And then it's a 70-30 70-30 split. So 70% to the investors, 30% to us after we get a full return of their capital back.
Got it.
So we don't participate in anything until they get all their capital back.
Yeah. So the preferred return means the first 10% goes to the limited partner. Is that correct?
That's correct. That's correct.
Got it. Well, that's pretty good. Love it.
If we can't pay 10% real time, like, which typically in the beginning of deals you can't pay, fully, like the 10%. Like right now in our
right, because the
current
money's
fund
used.
4.
Yeah.
Or just the deals are in different stages of turnaround, right? They're not fully stabilized yet. So like in our current fund, or the one we just wrapped up, Fund 4, we're paying out real time just shy of 7% on a quarterly basis. A number of folks in there are at the 8, 9, 10 pref level, and so essentially whatever the downfall is, or whatever the delta is there between what we're currently paying, they're just accruing it. And so essentially what will happen is all that accrued will get paid back, and then the original capital will get paid back, and then only at that point in time do Brian and I actually participate in any of the profits. And in order to get there, typically what has to occur is it doesn't all come out of cash flow. Like, we'll continue paying out of cash flow, but we'll have liquidity events. We'll have situations where we'll do cash out refinances once we stabilize the properties. Some assets actually might get sold off in order to create liquidity events. And at those points in time, we'll send out big checks to actually start really knocking out the accrued pref as well as the original capital that they put into the deal.
Well, as we kind of wrap up, is there anything else that you'd love to share with people?
No, I mean, I think it was a great conversation. I appreciate you guys having me on. And I mean, I would throw it back your way. Are there any questions that are lingering about mobile home parks or parking that you feel like we didn't cover that you'd like to ask?
Well, the biggest thing is I always used to get RV parks and mobile home parks mixed up. So the one is for vacationers and one is for permanent residents, as you said. So I cleared that up.
There's some caveats there. There's a couple.
Oh, yeah?
Depending what part of the country.
Caveats?
Yeah. So if you get into like the Sun Belt states, and I'm going to use Florida because that's where I'm based out of. Arizona is very similar. Texas is very similar, but there's a lot of RV parks that that are much less transient than that of what we think of when we think of RV park. We think of an RV park where someone pulls in their tow behind camper or their Class A RV. They stay for a day, a week, maybe a month, and then they leave, right? And then a lot of times there's seasonality to that as well, where in the wintertime it might be shut down. It might not even be open based on where it's located geographically. Well, here in Florida, a lot of the RV parks have morphed into something more permanent in some instances where they're zoned RV parks. They have RVs there. They also might have these little park model homes, which look like tiny homes, which are classified as RVs, to where folks live in year round. And so they're zoned RV parks, but they live and breathe like a mobile home park. A lot of times they're either second homes. Maybe folks have a home up north, and this is kind of like their little summer getaway or winter getaway, however you want to look at it. And then sometimes they end up staying. They're like, okay, well, I love Florida. I hate the cold. I'm not going back, and I'm going to stay year round. But all I need, it's just me, or it's just me and my husband. All I need is this camper or this Class A or this little, basically one bedroom, one bath tiny home. So, and that's very common here in Florida and Arizona, Texas. There's a number of other Sunbelt states where you'll find parks just like that are RV, but they operate like a mobile home park.
Got it. Thank you for clarifying. I wasn't aware of those caveats, actually. Well, where can people find you on social media, Kevin?
Yeah, I'm pretty active on LinkedIn. I'm on Instagram and Facebook as well. I always joke and say my last name is pretty unique, Bupp, B-U-P-P. So if you just type in Kevin Bupp on any of those social platforms, you'll find me pretty quickly. If you want to learn a little bit more about what we've got going on at Sunrise, you can go to investwithsunrise.com. We've always got our current offering up there, whatever it might be. And then we provide case studies. We put a lot of information up there about deals we currently own, what the business plan was, historical case studies of things that we've maybe gone full cycle on. So there's lots of resources there as well. Some white papers on parking lot investments, white paper that's on mobile home park investments. So quite a bit of good information that you can find by going to investwithsunrise.com.
That's awesome. Well, thank you so much, Kevin. I really appreciate it. It was great to have you on.
Thanks, guys. Much appreciated.
You're welcome. You got my inspiration going now for that parking structure.
Thanks for listening to the DealMachine Real Estate Investing Podcast. Please leave us a review and follow along wherever you're listening to your podcast.